If you're one of those people that believes that the recent crypto drop is a reason to be buying the dip, then you're going to want to watch this video because first of all, you're right. But second of all, there's more to it that you need to know that was going to make you prepare for this a lot better. So that's what I'm going to be covering in today's video. If you're new here, welcome. If you're returning, welcome back. I'm Annie and this is Trade Travel Chill. We're going to get straight into the price action because we've had a significant drop. I want to go over everything that matters that helps you to make a decision as to whether or not this is the dip to buy or should you be waiting a little bit longer. So as always, let's first start with Bitcoin because that's going to give us an idea about the market in general. Now, what we can see here is what's happened over the weekend with Bitcoin is we have dropped back to retest a prior resistance at about the 112K mark. Now, earlier this week, I told you that my target was this liquidation zone between about 113 to about 114.5. We did wipe all of that out and dropped further through. So we got a little bit more out of that trade than we anticipated. The key now is going to be if this prior daily resistance holds when the market opens this week. When we have a look at the 4-hour time frame, this is the most important pattern on all time frames so far. So this pattern right here is called a half Batman in the system that we trade on this channel, and this had me signaling to you for weeks that the price was going to break down further. So if you have been watching this channel regularly, then you were well and truly prepared for this drop through here. We didn't need FOMC, we didn't need NFP. They just helped us to predict when it was going to happen, which we predicted perfectly on this channel because we were saying that NFP was going to be the biggest market mover of the week, well and truly before it happened. So the question here then is if this pattern did lead to this move to the downside like we predicted, then is the damage done? And this is where my main focus is going to be. So we know that this liquidity was completely wiped out. And that means that on this move down here, we need to now see where the new liquidity is. So when we have a look at this, we can see that we haven't really built up a lot of liquidity below price. And the next large major area is still down here at about 105.5 to around about 107, 108K. Another thing we can look at is where are the current high level longs and short orders. And so when we have a look at those heat maps, we can see that we have high level shorts waiting between 115,200 to about 116,000. Below price, we have the buy orders, and the most significant level is sitting at 110,000. The next one being 111,000. So when we have a look at those levels on the chart, that's basically here what I've marked on this chart. Now, this one here at 112, that was there prior to the weekend, and that's where at this point in time we have spiked into, and we're starting to see a little bit of a move out and away from it. So these orders are gone now because they've been filled, and that's what's testing the prior daily resistance. Now, here's the problem that I see. With this formation, it should lead to 3 levels of drop, okay? The first one, we can clearly identify it has happened through here. That's what triggered the trap traders and then led us into a sideways range. The second one was through here. So if there's going to be 3, there is a chance that the third one is still coming. And so for the purpose of buying the dips, that doesn't hold me off, but I'm going to explain to you based on this pattern, how I personally am planning to buy dips. So stay with me for that. But right now, what I want you to be aware of is that we have high level shorts, as I've just shown you, waiting just under the 4-hour time frame 50 EMA. There is a high chance that price now attempts a recovery somewhere up to these orders or the EMA, and then we actually get a final drop into potentially the 110K zone. But it does worry me, these long orders, because usually the long orders are my final confluence. They're not what I bank on as a target. What I bank on instead is previously unrecovered vectors. So like this green one through here, and then liquidity also in that zone. And if the EMAs are around there at the time, that's another level of confluence. So you can see here at the 111K area, I don't have unrecovered vectors. If you look to the left, we just have this cluster here of price action. It's not an unrecovered vector. The 110K area does come a little little bit into this candle here. But like I said, there isn't a high level of liquidity, and it's the high level that causes the bounce. So that's why these two levels here are worrying me at this point in time. Now, one thing I'm going to monitor this week is to see if liquidity does start to build, because we're only just starting to get a bounce out here now, and it's the weekend. So when the market opens, for just an example, if we create a higher low, say in the early part of the week, that may encourage more people to go long. And if it does, then more liquidity will build in this zone. So what I'm telling you is that it's not there now, but it may still build when the market opens, and that's what we need to watch for. In the event that it doesn't, there is a chance, and I think we need to be prepared, that level 3 will come into this liquidation zone. Now, I'm going to put that zone at, say, about 105.5 to say 108. Look, I don't think we'll drop all the way into the bottom of the zone, because the highest level is here at about 107. But I want you to be prepared for that, because if you see this weekend's drop as a buying opportunity, you might be right, because the liquidity that they wanted to take may have been taken, and we won't know that until we get above these short orders right here. But it may also equally end up being a short-term bounce before we head down further. So now let's take a look at all of our dominances and market caps to get a little bit of a better idea. First of all, with the Bitcoin dominance, we've got a second rejection at this point in time off the 200 EMA. It's good for your alts, and it may mean that the Bitcoin dominance doesn't actually get back up to my area of interest. I still think it's a high chance. We're still waiting to see, because at the end of the day, what could be happening right now is that this is sort of in the process of creating a bit of a wedge. So with enough time, we may come up close to that area of interest. To me, it doesn't matter. It either rejects under the 200 EMA, which is the yellow one on my chart, which is where it's rejecting now, the 50, which is the blue, or my area of interest. Any of these levels is where I'm looking for the Bitcoin dominance to further break down, which will give me more confidence in altcoins. So far, so good there. When we look at the stablecoin dominance, this seems to be following my idea that I kind of mapped out here on one of my prior videos, where we may just be retracing back up to somewhere near the 200 EMA. Hopefully we create a lower high there, and then we end up breaking down further. Those are the things that we need for alts to kind of take off. Now, when we have a look at the total minus Bitcoin and minus stable coins, this was an idea that I shared with you on a prior video that is still in the process of playing out. So at the time, we'd only had this price action through here, and I said what may happen is that the total may start to build a bull flag here. And the longer it takes, the better, because it's more time to accumulate, and it may end up taking that through the rest of this month, potentially meeting the 200 EMA at some point in time. If it did that, it would also retest the prior resistance level here. It looks at this point in time that it's starting to confirm this pattern. I mean, it hasn't yet, because there's not enough touches. So this is just an idea. But this part here has given us the first touch to the bottom of a potential bull flag. So this is what has my biggest attention for buying dips for altcoins. What I'm going to be watching for, and what I think you should plan for if you are one of those people wanting to buy the dips this weekend, is this does look good. I'm not saying you have to buy today, because you still need a daily candle close. This has 13 hours till the daily candle closes at the time of me filming this. So this first bounce here, if that closes as a bullish engulfing, for example, that would be a good first area to buy the dips. However, I don't think it's the area to go all in. Here's what I plan to do with my capital. Basically, whatever I'm willing to put in the market, I would split up into 3 sections. The first section is for buying the dip at this point in time, what we've seen over this weekend. The second, I will reserve to see if the flag comes back and gives us one more touch to the lower trend line. Again, that could take time, and I'm prepared to wait the whole of August if it turns out to be that way. So if it turns out that we get a little bit of an altcoin recovery, we cannot break through the top of this flag, the flag starts to get confirmed, because we then have another touch, we reject there, and and then we come down to create the next touch to the bottom of the flag, that there is where I will deploy the second third of my capital. That is going to give me an average entry somewhere between on whatever altcoins I personally want to add. And this could be the plan for you and your altcoin list. Now, what am I doing with the final 1/3? Nothing. I always keep that for emergencies, for things that come up that I wasn't planning to buy, but I hear about them and decide to add it to my portfolio. Whatever it is, always keep spare funds available for whatever reason that you may need it. I would never be 100% in the market. So the third remains as a reserve for an emergency. Now, what happens in the event that this flag doesn't happen and I don't get this touch here to do my second set of buys? Well, it's no issue for me, because what would happen in that case is we would break out. I would learn at that point in time that this wasn't a flag, it was just a break and retest. And then it would also break and retest. So on that retest is where I would then instead deploy the second third. So I have a plan for either way. And that's the most important thing as a trader, is to always have a plan for either way. If the price dips further, what are you going to do? If the price breaks out from here, what are you going to do? And just remember that with enough patience, there's always a pullback. If you've been watching this channel for a while, then you will know that when the altcoins started taking off and people who weren't in yet had major FOMO, I was saying to you, there will be a pullback. There will be a time to get in. And at the time, it felt like everything just kept going and going and going, and that you were never going to get your chance. But with enough patience, you will see over this weekend, the chance came. So if you are wanting to start deploying some cash into the market and buy up this dip, you're going to need somewhere to do that. Check out Weeks. We have a really awesome exclusive promotion just for TTC fans right now, where you can get 1,000 USDT plus 100% position airdrop for downloading the app and trading futures. Now, if you use the link in the description, on top of that, you also get VIP2 trading fees for life. That's equivalent to a 25% trading fee discount for life. Whether you use the exchange to trade on today or you don't start trading on it for a month, you still have that VIP status locked in. People usually have to trade a lot to get that VIP status. And in addition to that, we also have a deposit bonus right now where you can get a 20% bonus for your deposit, meaning if you deposit $100, you could get a $20 deposit, 500 gets you 100 bonus, 1,000 gets you 200 bonus, and 2,000 gets you 400 bonus. So just by joining Weeks today, not only can you get a 20% deposit bonus, 25% trading fee rebate for life, but you can also get the airdrop for downloading the app. So now let's take a look at ETH BTC, because you can see here that we had a little bit of a retracement, but it hasn't come right down to my area of interest yet. Look, it may not, because we did have a significant sell-off over the weekend, but I still have my eyes on this. And again, if we do get a lower high and then a third level drop into the zone on Bitcoin, there's a chance, depending on how the Bitcoin dominance reacts, there's a chance that this area of interest may still happen. So I still have my eyes on it. But if we don't get close, if the best we get is this blue vector right here, that's just another very positive sign for alt season, to be honest with you. Although I shouldn't say alt season, because it's not an all-out alt season. Some alts are really doing absolutely terribly. So yeah, that's not what I mean when I say it. I'm really talking about the good, high-quality alts that we cover on this channel. Hopefully you guys know that by now, because most of the alts that we've been covering have been performing very well. So this is going to be key as the week opens, to see if it is deciding to hold this level, or if a lower high forms, then that may mean a deeper pullback is coming. So let's have a look at ETH USDT then, because this played out perfectly. And I did cover this on this channel throughout the week. I think we did this on a live stream where price was here at the time. And I had pointed out these two levels here to be aware of, that price may come back here to create a third touch before breaking down, because this was a rising bearish wedge. Or if it came to this level right here and created a lower high, it was was going to break down from there. So what happened in the end was we got the lower high and we got the most perfect breakdown right into the top of my entry range at about 3,380 and just above the 4-hour 200 EMA. So this looks good. And again, it's possible that the final damage is done here. So I do think this is a good buy the dip zone, but at the same time, there is a chance that this move to the downside isn't done. And so I would just be prepared now for a short-term recovery, potentially up to the 4-hour 50 EMA, and then one more move down because my final target is around 3,200. So again, I do think this is a good zone to buy the dip, but keep spare funds because if we create the lower high and head down, you can then deploy at around the low 3K area. When we have a look at some other coins that I've covered on this channel recently, XRP is looking great as well. It's come back into my area of interest, exactly right into its high level of liquidity. Now these things, if they're going to change trend, they will start to create a W formation on lower time frames. So this would be the first side of it. And then throughout next week, you'll get a higher low. And on that higher low, you would anticipate that it's then going to break out and start taking all of this liquidity right here. The only thing you have to keep in mind right now is that that's not a guarantee. And that's why you have to wait for this higher low, because the higher low is going to tell you that these traders are trapped and the market maker wants to keep them trapped. The reason why I'm remaining cautious, but optimistically cautious, is because when you have a look, the traditional formations, which I don't trade, but I mark them out to understand what retail are thinking, these are confirmed when they have 3 touches to the trend line. And so a lot of them at the moment, they only have 2. And that could mean that the current bounce you're seeing over the last 24 hours or so is only going to be temporary. And there is one more down to go. So that's why we've got to be on the lookout this week for a higher low to signal the final damage was done, get involved, we're breaking out, or weakness that breaks down below the current low, and that will finalize your patterns. And as long as those patterns hold, that should then be the actual final damage. Now, if you're wanting to learn how to trade like this in full, consider joining us at TTC. We have full memberships that give you access to everything that we cover on this channel. You get access to the indicators that you see me use, all of our trading education courses. There's 2 memberships to choose from. Business class gives you access to everything that's recorded. It's more of an independent learners membership, so you can still read all of our updates and watch all of our recordings. But if you want live help, then you need to consider a first class membership where you'll get access to the chat channels of the Discord. You can ask questions and you can attend our trading sessions live. The link to the website is in the description of this video if you're interested. Now, Cardano is another one that I covered on this channel. You can see here that it has pulled back right into my zone, right into these vector candles, taken out a lot of this liquidity here, looking like buyers are stepping in at this point in time. So this is all on the daily time frame. When you go down in levels, you just want to start looking now for evidence of buyers stepping in. So this is a good start, but again, we want to see more power. We want to see price push through, come up to some EMAs, have a little bit of a rejection there, but create a higher low. The higher low is your signal to get involved. If you don't get the higher low, there is still more liquidity down below that they may be coming for first. Now, the only really disappointing one to me, to be honest, was Solana this week. And I'm going to tell you why. This was the idea that I had for Solana, which so far has played out. So we've had this drop through here. We had the retracement. We had this drop. Now, it's not on this chart anymore, but in prior videos, there was a liquidation zone somewhere around here, and the price broke right through it. And it just kept going. Now, when that happens, that's not a very good sign to me. I like to see price bounce directly within my liquidity zones. And when that doesn't happen, it's just not a very strong altcoin for me. It's not a high probability trade setup. So there is a possibility that Solana, again, may come down for another level. We've now come into this new zone. So this new zone that I haven't talked about on this channel yet is between 143 to 158. And it's possible that we get a bit of a retracement, again, back potentially to the EMAs, and then come down to the bottom of this zone, or, somewhere within the zone. If I zoom out on Solana, you'll see that the bottom of that zone also lines up with this daily time frame trend line. And by the time it gets there, it will probably also line up with the 800 EMA. So there's a lot of reasons for Solana to come down to like 144, 145. It really depends on how the rest of the market is this week. But even when you look at the price, there isn't vector candles here. That's usually something I look for as an area for price to retrace to. It came lower than the liquidity that I had marked. It's just really not, for me, a nice setup right now. And I probably would get more interested if Solana did actually come down and take out all of this liquidity. But again, it's similar to everything else that I've covered today. There is a little bit of a bounce happening now, which means this is your signal whenever you see a little bounce like that, to then go to the next time frame lower than wherever you're seeing the bounce, look for a W formation. So as an example, I'm seeing this little bounce on the 4 hour. That means I need to go down to the 1 hour and I need to look for signs of a potential left side of a W to then start looking for the right side. So what I can see here on this is there's a vector candle right here. The price looks like it's making its way back to right now. And that does mean that there is a potential for this to become the left side of a W and the right side is yet to form. So if there is a rejection in this zone where this 1 hour vector candle is, that's what I'll be looking for next. The second option that could happen is this gives us a V-shaped recovery because we're almost right to the top of it. If that were to happen, that's also fine. What happens from there is you don't get the right side of the W, you consolidate. So the price will come up and it will fully recover this candle and then it will just go sideways for a bit. And whilst it's doing that, this 50 EMA will start to act as support. And so if you see something like that, that's where you discount the idea that you're going to get the second sign and you start buying in the consolidation in anticipation of a further move to the upside. So 2 options there. That's essentially the plan of what you should be looking for basically everything that you feel like buying right now. I mean, look at this one. So this is AVAX. This was something that I covered on YouTube as well. And at the time, this level was so far away from price. And look how it's come right back into that zone. It's taken out the liquidity. It's returned to these vectors right here. This is all old TA that I haven't changed at all. And so again, now that you're in the zone, you just go down to smaller time frames to look for evidence of that change in trend before you just manically start buying. On the news front, looks like we've got a little bit of a quieter week, which we deserve after the week that we've just had. Going over the notes from our macroeconomists inside of our Discord, he's confirming that this week has a very light schedule. ISM Services PMI on Tuesday is the item to focus on this week. So if you understand the trading method that we do on this channel, we usually expect that the week opens with a false move to trap and liquidate the weekend traders. That usually happens sometime from now, which is why I do these videos on Sundays so that you can catch it or be aware of it. So that might happen anytime from now into usually Monday at the latest Tuesday US session. Now, sometimes a news event that is timed around those times can be the thing that ends the false move and starts the normal week's trend. So ISM is going to be an important one to keep an eye out on because whatever the trend is prior to that on a smaller time frame, that may be the thing to either change or confirm that trend. And Jared confirms that here by saying that it could serve as the pivot into the 3-day swing for Bitcoin. On Thursday, we have the Bank of England rate decision. Typically not a market mover, but worth keeping an eye out. Given the light news schedule, there is a US 10-year Treasury auction at 1 p.m. New York on Wednesday and 30-year auction at 1 p.m. New York. That could cause price volatility. Global rates fell a lot last week, so the bond market is likely a focus for markets right now. And also we have earnings continuing. So with all of that in mind, then, if you're hunting for the false move this week, it may not be that easy to predict. It may not come with a drop in open interest, which is something that we usually look for, because on the 1 hour time frame for Bitcoin, the 3-level drops have played out here, as you can see, and therefore this may be attempting the pivot. But what we need to be careful for, as I said, is that on a weekend, I don't trust trend reversals. You need the week to open to prove that the trend is actually changing before you get too excited. So it is possible that this is already the beginning of the false move, and again may take us up into these short orders before seeing further downside. So I would imagine that potential change in trend or a confirmation of the trend may happen sometime around Tuesday. If you've already bought the dips on this over the weekend, ride the trend whilst the trend is there. Just be very, very aware of these short orders. Look for weakness. Weakness might be your hint to take profit. But as I said earlier, if this move gets confirmed with a higher low, then you have successfully bought the dip on this one.